Hey, what's up traders? So this is Rainer here, and in this video I'm going to share with you how to use moving average to trade with the trend, how to use moving average to help you identify areas of value on your chart, and how to use moving average to write massive trends in the market. Okay, very simple. So the first one we're going to talk about is, how to use moving average to trade with the trend. So for me personally, I'm a trend follower and I like to trade with the long-term trend. So how do you define the long-term trend? That is the question. So very simple, right? What you can do is use the 200 period moving average. You can see I put in 200 here. I like to use exponential and the close. So you click OK. So all you need to do is to pay attention to the direction of the 200 MA. If it's pointing lower, then you look to short. If it's pointing higher, then you look too long. So if you apply this simple filter, you'll tend to find yourself, on the right side of the markets more often than not, right? So just use the 200 MA as a simple filter to help you decide whether you should be long or short. The next thing I want to talk about is how to use moving average to help you identify areas of value, right? You know that, areas of value, some possibilities, at previous resistance turn support, right? That is one. Alternatively, right, you can also use moving average, right, like the 20 and 50 period moving average. Right, in this case, let's put in the 50, right, and the 20. So what this does, right, the 20 and 50, is that it helps you create, let me change this to red. It helps you to create a so-called zone, an area to look out for, where price may potentially, pull back into, right? So you can look at this, right? This over here, this area, right? Between the 20 and 50, this is a potential area of value, right? So if you ask me right now, right, where is an area of value? I would say this over here is definitely an area of value to trade from. Plus, you have this confluence of previous resistance that could act as support. So you have a moving average, you have your support resistance, coming into play. So this is definitely a level that you want to pay attention to when you are, trading with when you're trading in this market. Okay, so this is how you actually use moving average to help you identify areas of value. Now don't get me wrong, right? A lot of times traders has asked me, right, Rainer, what's the significance, the 20 and 50? To be honest, there is nothing magical about it, right? Sometimes it works. Sometimes, if the trend is, too weak, it may not work. Like for example, if we talk about the euro dollar, I put in the 20 and 50. There is no significance on this chart and on this time frame. All right, you can see I put in the 2050, right? This market clearly, right, isn't really respecting it at this point in time. So what do? Right? Then don't pay attention to the 20 and 50, right? What you can do instead is to just focus on, say, for example, over here, right? Previous support, turn resistance, right? This is possibly a level to pay attention to, right? So you have to use a little bit of common sense down here, right? If the market is not respecting it, right, then chances are you don't really want to use those moving average. Okay, so this is how you identify areas of value on your chart. And last but not least, right, I want to talk about how to actually write massive trends in the market using moving average. So in this case, right, let me just remove the 20. You can actually realize now that this 50 period moving average, this blue line over here, has been respected by the market since 2014, August 2014. So if you are a trend follower, what you can do is just simply to trail your stop loss as long as the market did not close below the 50 period moving average. So that would actually allow you to capture this bulk of this move over here, right? And all you do is to trail your stop loss using the 50 period moving average. So one thing you can do is that if this market closes below the 50 period moving average, then you look to exit your trade. But if it doesn't close below the 50 period moving average, then you look to hold on to this trade and see how far this trend would continue. Again, right, there is nothing magical about the 50 period moving average. You can use 100, you can use 200 period moving average. But the thing is this, right, the longer period of moving average that you use, right, the greater the trend you'll capture. But the downside is that you would give back more open profits. So it really is dependent on, what type of trend you're looking to capture, what is your goals from trading, and then you can, use the appropriate moving average that better suit your own trading style and personality. Alright, so just to recap what you've learned in this video, right? Number one, we talk about the 200 MA, acting as a filter to help you decide whether to be long or short. Number two, we talk about using the 20 and 50 period moving average. 20 and 50 period moving average to help you identify areas of value to trade from. And number 3, I shared with you that you can use the 50-period moving average, right, to help you ride massive trends in the market. Just trail your stop loss using the 50-period moving average, and if the market closes beyond it, right, then you look to exit your trade, right? You will not catch, every trend in the market, okay, but you will definitely catch a few trends that is going to pay for all the little losses that you will incur. Alright, so with that said, I hope you found this video useful, and if you have enjoyed it, right, feel free to hit the subscribe button below. With that, I wish you good luck and good trading. Talk to you soon.